Good afternoon. Let's do some business. We are doing it live, wrapping up a big week, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Yep, Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com. And the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Epic week this week, record-shattering week for the Dow Jones Industrial Average, with the Dow edging higher again today and standing at a record high to close out the week. The other major averages pulled back slightly. All the major averages booked gains following the Fed's big interest rate cut we saw on Wednesday, the bigger than expected by most people of a 0.5% cut in the Fed funds rate, the benchmark rate, which impacts the business and the consumer loans out there. Borrowing costs, the Dow coming in for a closing gain of 38 points, settling at 42,063, and that indeed is a record high. The Dow cracked 42K for the first time yesterday, closing at an all-time high, extending the record rally for the second day in a row here. The S&P 500 did pull back 11 points off its record at 5702, and the NASDAQ dipped 66 points to settle at 17,948. All the major averages posting gains for the week. We did see the AI trade, the chip trade, back in full force this week, with NVIDIA shares rallying this week, but pulling back a bit today, down $1.87, back to $1.16. Looks like Nike making news this week, rallying today. The sneaker and sportswear giant climbing more than 6% today. And we, on the flip side, saw FedEx, one of the big losers on its latest earnings news. That package shipping company down 14%, down to more than $45 at $254 and change. Among the winners today, Constellation Energy and Vistra have been among the best performing stocks of this year, reflecting optimism about the nuclear business, reflecting optimism about the company's potential to capitalize on the power needs of AI players. Both stocks moving higher today. Constellation shares moving sharply higher today, up more than $46 at $254 and change. Epic news in the Middle East this week. I'll talk about it. I'll talk about it with one of the giants in the world, one of the top religious leaders in the world, Rabbi Abraham Cooper from the Simon Wiesenthal Center and Museum of Tolerance in West Los Angeles will be joining me live this afternoon. And a week from now, yours truly, along with other business leaders, will be rappelling off the top of the Universal Hilton Hotel for the Union Rescue Mission. That's right. It's the Over the Edge event, the big fundraiser in conjunction with the Just Help One campaign that was just announced by the Union Rescue Mission. I'll be going over the edge along with Randy Wang and some other folks, business folks, as well as media folks will be going over the edge to support Union Rescue Mission, and we invite you to support Union Rescue Mission at justhelpone.org. I'll talk about that big event a week from today with Richard Newcomb, Vice President of Philanthropy at the Union Rescue Mission. He'll be joining me live later this hour. But first, to wrap up this epic week, one of the biggest names on Wall Street, Art Hogan is with us now, Chief Market Strategist at B. Riley Wealth Management. You see Art on all the major financial networks, quoted in the financial papers and websites, and for decades, a guest on this program. Art Hogan, thank you very much for taking the call this afternoon.
Frank, thanks so much for having me, especially on such a great week.
Absolutely. A record high finish for the Dow this week. The big Fed news, that was the main event certainly this week. Give us your impressions here. It's been a while since we've chatted behind live microphones, so love to hear what you think of things these days.
Yeah, it's interesting. So this is a year we came into thinking the Fed was going to cut about 5 times, and we'd likely start that in March. And lo and behold, we've been waiting until the September meeting to actually make that a reality. And the good news is they've actually started cutting, and they've delivered a message that this is the first step in what's going to be a long path of getting rates down to the neutral rate. Remember, they got rates all the way up to 5.5%, and that was as of July of 2023. So we've been waiting a while to see when the Fed funds rate would come off the boil. That started with 50 basis points, or a 0.5 percentage point, and the path of that seems to be that they're going to try to get to 200 basis points, or 2%, off that Fed funds rate over the course of the next, call it 18 months. And how that affects markets is that you've got the ability for sectors that are more debt dependent or more cyclical in nature to outperform versus what we've seen for the last couple of years, where it's just been technology stocks, the Magnificent Seven, communication services, and the rest of the market's been falling behind. So in anticipation of that, the market has been broadening out nicely. There's 11 sectors in the S&P 500, and now there are 8 of those 11 sectors that are in positive territory and outperforming the index. Last year there was only 2. So we've got a market that's responding in a logical way, and I think this is the start of a very nice tailwind for markets here, especially if the Fed is actually acting from a position of strength, meaning inflation is getting closer to their 2% target, and while the labor market is softening, it remains within the realm of what we call the soft landing zone, meaning we're creating 100 to 150,000 jobs on a monthly basis over the course of the last 3 months. We've got GDP growing at or about 3% for the last 2 quarters, and it feels as though this is the right time for them to become less restrictive.
On the air live with Art Hogan, Chief Market Strategist at LA-based B. Riley Wealth Management. Art, let me ask you this. The Fed chairman did mention the R word, not recession, but recalibration. Are you in the soft landing camp here? And what does a recalibration mean, you think, for the markets here? And what's the road ahead as far as more interest rate cuts on the horizon?
Yeah, that's such a great question, Frank. So what he means by recalibration means specifically this. They needed to get to a place where they were restrictive, another R word, but restrictive, to tamp down inflation. So they went aggressively at raising rates to tamp down inflation. That has been successful, whether it was the interest rates or the fact that supply chains had cleared up. And so the combination of monetary policy and just the fact that transitory supply chain issues finally became unglued has gotten inflation on a CPI basis down from 9% to 2.8% and heading in the right direction towards 2%. So that now the Fed wants to be less restrictive and they want to normalize and get to a neutral rate. So recalibration basically means they want to start a glide path to neutral, and that glide path probably includes at least 2 percentage points, maybe 2.5, coming out of the Fed funds rate. But the Treasury market, the yield markets, have already priced that in a little bit. So we've seen, for example, the 30-year conforming mortgage is down a full percentage point since July. It's down, you call it 1.5% since the spring. I think that's going to be good for the housing industry. You'll note that most of the 2s and the 10s in the Treasury curve are significantly lower on a month-over-month basis, getting ahead of this particular move. But I think that continues, and I think the good news around that is for consumers, you're going to see lower mortgage rates. So instead of that 8.5 that we saw as we entered the year, we're now at 6%, and that likely goes down to 5 and change by the time we exit this year. And I think that's going to start some activity in the housing market, especially on the existing home sales, where 80% of people have mortgages that are less than 5%. 60% of people have mortgages of less than 4%. We'll start to see some people bringing inventory into the market that is much needed, and I think that's going to be the first leg of the stimulus that we see with these rate cuts.
On the air live with Art Hogan, Chief Market Strategist at B. Riley. What about the Mag 7 in all of this? In the past, we've seen tech stocks rally as interest rates come down. They've always been very interest sensitive. We've also seen a rally in the cryptos, too, which seem to, at least some folks think, they're correlated to the tech names and the NASDAQ. What are your thoughts about the tech names and the cryptos, for that matter?
Well, I will tell you this, Frank. The tech stocks have had a significant run over a 2-year stack here. So when we think about the Magnificent Seven, not just on a year-to-date basis, but over the course of the last 2 years, they've had a great run. And to the extent that you see investors perhaps not underweighting the names, but equal weighting those names with some of the other sectors, I think that's a healthy place to be. So if we're going to set an all-time high, which we did this week in the S&P 500 and in the Dow, I think it's a better place to be if that rally is broadening out. So that's not to say the Magnificent Seven and the mega cap technology stocks aren't going to have a great year, but they're not going to have a year like they had last year. And I think what's going to drive the other 493 stocks in the S&P 500 is the fact that investors can start looking at the interest rates as coming down and start looking for what hasn't performed or outperformed the market. So I think in general, the whole concept behind rising interest rates and then seeing them come down is the tech stocks, especially the mega caps, were agnostic to interest rates because they didn't need to access the debt markets. I think in general, the rest of the market does, and I certainly think that's why we're going to see a broadening out, and we've certainly seen that. As a matter of fact, if you took the equal weight S&P 500 as opposed to the market cap S&P 500 that we talk about every day, that's outperformed the S&P on a 2-week and a 3-week run basis. And I think that's telling of the fact that investors are looking for the things that have not worked yet in a falling interest rate environment and what likely will work for the next 12 months.
We've seen the dollar slip after the Fed's move to lower rates, supersized rate cut this week, and the market rallying. Not a big surprise, since when the dollar falls, that makes our stuff cheaper overseas, and the multinational companies reflected in the Dow Jones Industrial Average did rally this week. Also, it should be noted the price of gold has ended the week at a record high, up more than $32 today at $2,647.10 an ounce. What are your thoughts on gold and where the dollar goes from here?
Yeah, you bring up a really good point. So the dollar has been significantly strong because the U.S. Federal Reserve was the last to enter the rate-cutting party, if you will. All of the other developed countries had already cut rates, so we were the last to do it. And once we started to do that, or indicated that we're going to do that, the dollar came off the boil a bit, which I think is a healthy thing. You bring up a very good point. So the 2 points you brought up are really instructive. First and foremost, if you look at the S&P 500, 50% of the S&P 500 is more than half of the business overseas. So if you're making things in dollars and selling them in other currencies, you're actually making better profits when you do that currency rationalization. So that's the multinational benefit there. So we become more competitive overseas. The other piece of the puzzle, to your point, is that most commodities, including the precious metals like gold, are denominated in dollars. So as the dollar comes down, the price of gold goes up. Now, gold has been doing just fine, even in a strong dollar environment, only in so much as it broke out at a very long base last year. By long, I mean a base that had been working on for 10 years. And once that technically broke out, it got a lot of attention. Gold is up some 25% on a year-to-date basis. I think that continues. Now, it continues for a couple of reasons. Technically, it doesn't have any resistance for a while. Looking at 3,000, probably the next stop. But fundamentally, central banks, for a lot of reasons, are purchasing a lot of gold. And I think that layers in another stream of demand. So in general, I think when you think about a weaker dollar, as long as it doesn't collapse, you don't want to have it come down precipitously. And I don't think that it will, because we have a pragmatic Fed that elected cut now in 25 basis increments for the rest of the year. I think that's going to be a positive for the multinationals and certainly for the precious metals.
We're going to be discussing the Middle East later this hour. A nervous time there, of course, given the epic events we'll be talking about later this hour. Powder keg in the Middle East. Oil, meanwhile, still hovering just above $71 a barrel here. What are your thoughts about the energy names, specifically the oil names at this point?
Yeah, I will tell you this. The oil names that haven't looked this cheap or this reasonably valued in several years. You'd have to go back to the pandemic to see them looking more reasonably valued than this. So on a multiple basis, the sector looks good, but I think you need to look at the fundamentals and say, how are we looking for supply and demand? And supply and demand seems to be very balanced right now. What we're missing on the demand side is China. China's economy hasn't come back post-pandemic, and their demand for goods and services, including hydrocarbons, just hasn't been there on a global scale. I think that they start to get better in the fourth quarter of this year. I think that puts a new layer of demand in. At the same time, OPEC was going to take some quotas off and produce more oil starting in October. They've backpedaled on that. So I think we're in a very good place. It's important to remember that the energy companies make money if WTI crude oil is above $35. And whether it's 65 or 85, understand that they're making great money. So if you look at the energy stocks, whether it's the fully integrated like Chevron, paying a 5% dividend, plenty of free cash flow, very profitable. Or if you look at the North American energy producers or exploration and production companies like Devon Energy, again, another 5% dividend payer, very profitable, lots of free cash flow. It's one of our favorite sectors right now because we just think the fundamentals don't line up with where, in fact, the equities are trading.
We're on there live with Art Hogan, Chief Market Strategist at B. Riley, based here in Los Angeles. Among the energy names getting attention today, one in the nuclear world, Constellation Energy, and talk about how nuclear could power AI. What are your thoughts on this one?
Yeah, nuclear is going to be an important part of this energy future for us. We're better at it now. So they're actually thinking about getting 3 Mile Island back up and running, recommissioned. That'll take a couple of years, but it just speaks to how much energy we're going to need, whether it's for electronic vehicles, whether it's for the data centers that drive all the artificial intelligence compute power, or just the fact that the grid that we have now just needs more sources of energy production. So I think we're going to be hearing more about nuclear. I think it's a piece of the puzzle in the greater pie to get to a place where we can actually produce enough energy for all the need that we're going to have in the next 10 years.
All right, at this point, Art, let me ask you the big question here. I hope I don't take you by surprise on this one, but at this point, with the Dow at a record high, gold at a record high, and all the other major averages near record highs here, Bitcoin, by the way, above 63K, where are you putting money now and/or taking it off the table?
Well, Frank, I'm so glad you asked me that question, and it didn't really surprise me a great deal, since it seems like you've been asking me that question for the better part of 20 years. But I will tell you this, Frank. If in fact you're overweight to technology, it's not a bad time to diversify into some other sectors. Some of the sectors that we think outperform over the course of the next 6 to 12 months are things like the cyclicals. So think about energy, think about the industrials, certainly think about healthcare. And I think that being a more equal weight to the S&P 500 might help you out. You've done very well if you've had a technology exposure, but just try to rebalance a bit. The other thing that I think is going to be very good for the next, call it, year and a half is small caps. Small caps have underperformed large caps for the past 3 years. And the argument that is made is that the small caps were underperforming because interest rates were going up, and they're very debt dependent. Well, interest rates are going down now, and the small caps have a lot of mean reversion. So I suspect that an allocation to small caps is going to be a very good idea this year.
All right, and last but not least, is the Trump trade on, or is the Harris trade on at the moment?
Well, we're only 7 weeks away. I think it's important, Frank, to remember, no matter what you say on a campaign trail, is very hard to put into place in reality once you get the keys to Pennsylvania, 1600 Pennsylvania Avenue. So I wouldn't focus too much on the election. Unless and until you can tell me what the makeup of Congress is going to be, I don't think it matters who the president's going to be. So I wouldn't focus on that too much. At the end of the day, if we have a Democratic president and a split Congress, or a Republican president and a split Congress, that's the best thing to have. You don't want to have one party run the table and then make major changes to fiscal policy.
Art, thank you very much for joining us live here to wrap up this epic week, record-shattering week. We do appreciate it. That is Art Hogan, Chief Market Strategist at B. Riley Wealth Management, which happens to be based here in the Los Angeles area. And, of course, Art is also big on X, formerly known as Twitter, at Arthur Hogan III. I see you've already declared pencils down, beers up with your wonderful interns, also known as the doggies, right? So you've made that declaration already, and we want to wish you a great weekend, Art. Thank you very much for taking the call this afternoon.
Thanks so much, Frank. Always a pleasure.
Thank you very much, and we'll be looking for you on social media over the weekend. And, of course, Art Hogan, widely quoted in the financial press. You'll probably see his name mentioned quite a bit, and joining us here live this afternoon to wrap up this epic week. Right now, out to the freeways we go here on 790 KABC. Live it up, oh yeah. Friday night. Mottek On Money continues here in 790 KABC. Break out the bubbly. The Dow at a record high to close out the week, up for the second day in a row following the Fed's decision to cut short-term interest rates by a 0.5 percentage point, impacting business and consumer loans. Down 0.5% this week, and the prime lending rate charged by major banks now at 8%. The Dow coming in for a closing gain of 38 points, good enough for a record high for the second day in a row, and second close above 42,000 in history at 42,063. The S&P 500 pulling back slightly from its record high, down 11 points at 5703, and the NASDAQ slipping 66 at 17,948. The yield on the 10-year note right now, which impacts the fixed-rate mortgage rates, at 3.74%. We have seen those mortgage rates pull back over the past week, according to the latest survey from mortgage giant Freddie Mac, with the average 30-year fix pulling back to 6.09%. The price of gold at a record high today, at up $32.50 at $2,647.10 an ounce. Want to bring up the latest silver quote here as well while we have the chance, and certainly silver also in the spotlight this year with its big run-up, moving higher today, up 7 cents at $31.50. And year-to-date, let's see if we can bring that information up. Looks like year-to-date, silver is up 31.5%. Constellation Energy shares of more than $46 today at $254.98 among the nuclear names moving higher. FedEx on the flip side dropping more than $45 at $254 and change on its earnings news. NVIDIA, the Magnificent One, continuing to be in the spotlight, rallying this week. Down today, though, down $1.87 at 116 even. The VIX index, the so-called Wall Street Fear Index, the Volatility Index, pulling back again today, down 1%. And now the latest news for you here on 790 KABC. Mottek On Money continues here on 790 KABC. Following the epic developments in the Middle East this week, the head of the Israeli military says that the Israeli military will reach anyone who threatens Israeli civilians, and they mean it. This following the assassination of a top Hezbollah commander. Also this week, we saw a rather elaborate intelligence operation conducted reportedly by the Israelis. Israeli intelligence services reportedly blew up thousands of pager devices used by members of Hezbollah's terror military units and institutions. And a day later, they also blew up booby-trapped walkie-talkies and delivered to Hezbollah as part of the militia's emergency communication system, which was supposed to be used during a war with Israel, further damaging Hezbollah's military command and control system. Meanwhile, multiple senior U.S. officials reportedly acknowledging that a ceasefire and hostage release deal between Israel and Hamas is unlikely before the end of President Joe Biden's term in office in January, according to today's Wall Street Journal. Following all of these developments closely, including the latest news that Hezbollah now confirming that senior commander Ibrahim Akil was killed today, saying it was among senior Hezbollah figures who were killed in an airstrike in a residential building in Beirut. Joining us live now is Rabbi Abraham Cooper from the Simon Wiesenthal Center in West Los Angeles. Rabbi Cooper, give us your reaction to the epic news this week.
Well, it's difficult to know where to start. First of all, Ibrahim Akil is a big deal. He was the leader of the Radwan force, those the elite commandos of Hezbollah, very well trained, and apparently he and other commanders who were plotting the invasion of northern Israel from southern Lebanon. And I think you have to take that into account when you look at all the other developments this week. But one other thing is that the United States put a $7 million bounty on his head. They designated him as a global terrorist. So I don't know if the Israelis will be able to, cash that out. But this was a bad person who was committed, highly skilled, to spread murder and mayhem all over the world. And it appears that that particular strike, again, shows that the Israelis have totally penetrated the communications capabilities of Hezbollah, because he and other important military individuals who are plotting perhaps a major move right now were taken out in a targeted strike in Beirut. I think that's extremely important. The other news today is that on Friday, 140 Hezbollah rockets, meaning the rockets that were sent from Tehran, were launched into Israel's northern sector. So the two most prominent communities are Kiryat Shmona, which is 3 kilometers from the Lebanese border, and Tzfat or Safed, which I think many, not only Jewish but Christian tourists who go to the Sea of Galilee. Safed is an ancient community that stands above the Sea of Galilee. I think without Israel's capabilities, the Iron Dome capabilities, when you just think about the volume of the rockets sent against Israeli civilians, first by Hamas, now from Hezbollah, basically could have destroyed the country. So the fact that we have this extremely serious situation is, and not something even more catastrophic, is the fact that Israel's been able to be a technological leader in fending off a lot of this activity. But everyone knows when they have between 150 and 200,000 rockets, if simply allow this war of attrition to go on, Israel would lose. So Prime Minister Netanyahu and Defense Minister basically announced that the war is going to happen. Their goal is singular, is to be able to get back the 60 to 70 or 80,000 Israelis who become internal refugees in the north, and Nasrallah, who's announced that they're just not going to let that happen. So I don't think you have to be a military or intelligent genius to know that something has really dramatically shifted. And while I think that Tehran assumed they were holding all of their cards through their Hezbollah lackeys, Israel has managed in 1 week to, shift the dynamics in a very profound way.
On the air live with Rabbi Abraham Cooper at the Simon Wiesenthal Center in West Los Angeles, and all of this in the context of the ongoing war between Israel and Hamas, which started last October 7th following the terror attack by Hamas on Israel. Hard to believe that the one-year anniversary of that attack is coming up. And, of course, Israel has been under threat of attack by Iran and its proxies. And now these dramatic developments occurring. What information are you getting about how this occurred with these thousands of pager devices used by terrorist Hezbollah's military units and walkie-talkies? They were all blown up this week.
Well, one thing is clear. This was an operation that had to be years in the making, with many other components falling into place. Remember, at a certain point, Nasrallah actually announced in one of his speeches, everyone take their iPhones and lock them up and put them away. And just then, they went out to buy beepers that would give them the opportunity to stay, for command and control for very basic stuff. And lo and behold, they made a deal with what looks like a non-existent Eastern European company, which turned out to be apparently controlled by the Israelis. It's really stunning, shocking development, and it might also help explain how it is that Israel is able to target now in Beirut. Sounds like the command and control of the pending military operation against the Israeli civilians in northern Israel. Stunning. But I also just wanted to make note, I was in Washington this week. I'm going back to New York to be at the UN Monday and Tuesday, trying our best on behalf of the Wiesenthal Center to help the hostage families. One particular person, Ruby Khan, is an American-born person in Israel. His son was in a tank. He was killed on October 7th by Hamas, and along with another member of his tank crew, their bodies were taken back to Gaza, where they're currently being held. And Ruby Khan has been indefatigable. He's met with our president. He knows Jake Sullivan by first name. We're going to try to get him some additional meetings at the UN because the General Assembly is there with French, European diplomats, and I hope also with some diplomats from the Arab world. And one of the incredible tragedies here, upon tragedies, is that I think the three Abrahamic faiths all agree that you don't hold the bodies of deceased people for hostage. They carried a holy soul, and I think all three religions talk about the dignity for the dead. And as we see with Hamas, they don't know the meaning of the word and are war criminals, guilty of crimes against humanity. They use their own people as cannon fodder. And here we are a year later, over 100 Israelis alive and deceased are still being held by Hamas under unimaginable situation and circumstance. It really just breaks your heart.
With so much going on, Rabbi Cooper, I'm not sure you had a chance to see that Wall Street Journal report today with quoting senior U.S. officials reportedly acknowledging that a ceasefire and hostage release deal between Israel and Hamas is unlikely before the end of President Biden's term in office in January. What do you think of the prospects of getting those hostages released, something that you'll be working on in the coming week?
Well, I think objectively it's true, but I also think that we still have a president of the United States. His name is Joe Biden. Even if he just got out the American citizens alive and dead, that would be something significant. And I believe that America has the clout to make that happen. Perhaps it's the election, perhaps it's his his current mental situation. I don't know what it is, but the United States has the muscle to at least get out its own citizens, and it's very tragic. As far as I'm concerned, that really leaves us with one person who can make that decision to force Hamas to make the move, and that's the Emir of Qatar, because he's the one who's giving Hamas the political cover, where Hamas leaders are there in Doha, giving money for Hamas to operate. If he placed a call and said, I'm freezing the funds and I'm sending you up to Tehran unless you do A, B, or C, I think he is the only person who's likely, who has the clout to make it happen. But I think that the Arab states, and especially Qatar, are saying, well, wait a second. You have the President of the United States. You have American citizens. You're asking us to go a lot further than America itself so far has appeared not to go. So it's just, I was after the speech by President Trump last night, which I did not attend, but I was with some of the hostage families who had met previously in the day with Vice President candidate Waltz and I believe also Camilla Harris as well. Your heart just breaks when you just see everyday people who have to go through this, suffer through this barbarity, and now have themselves become hostage, to high poker, high stakes, global, international machinations. And at the base is a terrorist group that doesn't have any rules at all. It's a tragedy.
Thank you very much for joining us live this afternoon. We look forward to speaking with you during your trip to New York, and we wish you all the best and safe travels there. Thank you very much for this important conversation this afternoon. That is Rabbi Abraham Cooper at the Simon Wiesenthal Center in West Los Angeles, live with us here on Mottek On Money on 790 KBC. Mottek On Money continues here on 790 KBC. Good afternoon. The Union Rescue Mission, the #1 organization addressing the issue of homelessness in Los Angeles, has just announced the Just Help One campaign. It's underway, along with the Over the Edge fundraiser set for a week from today. Yep, this coming Friday, a week from today, and Saturday, September 27th and 28th at the Universal Hilton Hotel in Universal City. What's that all about? Well, for one thing, I'll be working to raise money for URM by rappelling off the top of the 25-story Universal Hilton Hotel, along with other business leaders and supporters, and we welcome your support. Joining us live now is Richard Newcomb, Vice President of Philanthropy at the Union Rescue Mission, who has kept us well informed of what's happening with the homeless in Los Angeles and what needs to be done to meet the tremendous challenge out there. And congratulations on this Just Help One campaign that's just been announced. And Richard, looking forward to seeing you a week from today at the Universal Hilton.
Well, thank you, Frank. We're thrilled. You're going to put on a superhero suit and jump off the rooftop of the Universal Hilton. We love you and your heart for what we do and the work of what we do, and we can't thank you enough for your support and encouragement.
Well, we want to encourage others to do the same, and I, again, bring up the late, great Scott Minerd, who was a giant in the investment world, head of global investment for one of the biggest investment companies in the world. He was and still is your biggest supporter, even posthumously now with the foundation and matching all the donations. And he was on this program praising URM as the best investment as far as he was concerned on homelessness, and praised everything you're doing there. Richard, tell us more about the event and how everyone can get involved.
Well, you're right. Scott Minerd was an amazing supporter of ours for over 25 years, and he did exit the planet a couple of years ago. And through his estate, we have a matching gift that for $600,000 to help hopefully make this a $2 million event at the Universal Hilton Hotel. But as you mentioned, we're doing great work. Scott knew that, and we're trying to tell all of LA that we've launched this campaign that you mentioned earlier, Just Help One. We have about 158 billboards around the city to help one person, one family, one child get off the streets, move on to a better life. And we're also on iHeartRadio and your radio station, letting people know that as well, that URM is worthy of support. We get a perfect 100 rating from Charity Navigator. And we're really making a difference with 86 cents of every dollar going to life-changing, life-saving, life-transformational programming. So we're hoping to win more fans, by sharing what our good work and what we're doing. We've been in Los Angeles for 133 years, and we're aspiring to do more. We just need more folks to come on board and join us. So we hope a bunch will come out next Friday and Saturday at the Universal Hilton. We have slots available. You just have to donate or fundraise through our Friends Asking Friends website to sponsor you to raise $1,000 to help us in our goal. And it's an amazing experience. I've rappelled off the rooftop of the Universal Hilton Hotel 8 times over the last 5 years. It's exhilarating. No one's ever been hurt. This has been going on for 20 years in North America. And we're hoping to raise $2 million at that event next week, and we hope folks will come out and join us and be a part of it.
That's fantastic. For anyone that wants to participate, of course, we invite business folks as well as media friends out there. This is certainly a public action campaign that everybody can get behind to support Union Rescue Mission and the great work that's being done there. And my 790 KBC colleagues John Phillips and Randy Wang will be broadcasting live a week from today from noon to 6, basically. I'll be out there with Mottek On Money at the Universal Hilton, also rappelling off the top of the hotel. And what's the best way to sign up and support Union Rescue Mission here, Richard?
Folks can go to justhelp1.org, justhelp1.org, and you can sign up. You can register to be a participant and actually go over the edge. We'll give you an option for when you would like to go on Friday or Saturday. Your family and friends can come out poolside at the hotel and cheer you on. We're actually taking over the entire pool area on Friday. Or they could, if there's any corporate sponsors, we had Sweet James law firm sponsor us, and they're a major sponsor. I'm going to have a team going over the edge with us. And so there's a sponsorship button, or people could reach out to me through events@urm.org. Or you could just make a donation. There's a donation button as well.
Terrific, Richard. Well, we'll see you there next Friday. It's going to be big, and we'll be right there with you supporting Union Rescue Mission. Again, we want everybody to support justhelp1.org and get on there and go over the edge a week from today. I'll be right there with you. Richard Newcomb, Vice President of Philanthropy at the Union Rescue Mission. Thank you very much for joining us live here on Mottek On Money on 790 KBC.
The Bigger Pockets portfolio of podcasts are worthy of your investment.
The whole idea of what a house is worth is actually subjective.
New episodes available every day.
I've heard a lot of people who are starting to move into flipping because it really has good margins in today's market.
Whether it's real estate, on the market, rookie, or money,
I do think that mortgage rates will come down.
The Bigger Pockets podcasts are on YouTube or wherever you listen.